Hello viewers, we'll be going over gold miners, ticker symbol GDXJ. In this video, we'll be going over my trade idea of the week and how I developed that idea. So let's start off with the technical analysis. We're currently up 2.8% on the 1 hour chart. We have now approached to positive MACD and we're nearing overbought RSI. As for the 4 hour chart, what we have here is we start to see a convergence after touching negative MACD and we are nearing overbought RSI. And we bounce right off the 50 moving average, this yellow line. As for the daily chart, if we expand that further, we bounce right off the 9-day moving average, this blue line, and we are also nearing overbought RSI. We see a slight divergence on the daily MACD. However, we do see continuation of uptrend, and we may continue to test this resistance, what we made back in July 27th, at around a price of $62.56. So as for my long position, my portfolio size for that entry will be less than 1% of my portfolio, and my entry for my long position is $55, and that is around the range where we made a gap up between July 17th to July 20th. So that's my long entry right here, and my sell target is $63.35, and my stop loss is $52.15. On the other hand, my short position, if we do continue on higher, my entry will be around $65.44, which is slightly above where we made the highs of last week, and my sell target will be $58.13, and my stop loss for my short position is $67.70. So how did I develop these trade ideas? The day-by-day probability model and the bullish and bearish ratio come from this model right here, the day-by-day probability model. These models are available in the link below, so do check it out. As we progress to the 5th day, we have a 6% chance for gold miners to climb between 0 to 9%, and to downside a 30% chance for it to fall between 0 to negative 9%. And on the extreme case, a 10% chance for it to fall between negative 9% to negative 17%. So which one of these models we should use as a reference? One, we will use the blue line is our current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the trend below is the one that we found on the line graph above. And this trend dates back to December 14, 2015 to March 11, 2016. So let's begin comparing both trends. So we have 1, 2, 3 points. And on the trend in question, we have 1, 2, 3 points. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined back then, December 14, 2015 to March 11, 2016. So we have 1 day out. That will be a Wednesday, and 2 days out will be a Thursday, and so on. So we have 3 days out, 4 days out, and 5 days out, or a week of trading. Back then, gold miners was up around 4%, so it continued to have an upward momentum. If we head back to the day-by-day probability model, that coincides with this standard deviation, 60% chance for it to climb between 0 to, say, 9%. If we examine closer on the technical performance of each trend, so we have the trend in the past that we just found and compared it to the current trend. So on the current trend, we're down 4%. Back then, we were down 4.6%. On current trend, we're up 30%. Compare that to the past, up 37%. And on 10 simple moving average, back then it was up 1%. Compare that to today's 36 basis points. And for a 20-day simple moving average, it was up 5%. Compare that to the current trend, up 6%. And as for the 50-day moving average, back then it was up 23%. Compare that to today's trend, which is up, say, 20%. So there are technical similarities among the two trends, and these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.